This is Dustin with Dustin's Dollars. Today, I'm going to be talking about Rocket Lab, going to give a recap of their Q4 earnings and talk about a couple other recent events that have happened with the company and give sort of an updated version of my forward projection model of the company going out, about 4 years or so. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Rocket Lab, so this video should be for your entertainment purposes only because I can be wrong about everything I say in this video. You need to do your own research before making any investment decisions. All right, so Rocket Lab. Here's a quick rundown of what I'm going to talk about. I'm going to go through the state of the company, through Electron, Neutron, space systems, and then I'm going to go through in a little more detail some of the, Q4 numbers, and specifically I'm going to talk about their liquidity and cash flows, touch on the recent convertible debt raise, and then I will, as I said, I'll touch on their Q1 guidance and go over sort of the forward projection model, what it could look like for the company over the next few years. So that's the agenda for today. Let me sort of just get right into it then. And if you have any questions or comments, feel free to add them in the chat. I will be watching that as I am streaming here. So starting off with Electron, and this was something that in Q4 was a bit of a letdown. They did not do quite as many launches as they originally planned. I think they only ended up getting 2 launches in the quarter because there was some. If you recall, they had that anomaly. They had that failed launch in, I want to say it was September, and that kind of put a damper on things. They had to sort of ground everything and go through a full root cause analysis on that and put in mitigation procedures in place and go through some procedures with the FAA, I think, or somebody. I'm not quite sure what government agency to get cleared again to do more launches. And so Q4 wasn't so great, but looking forward to 2024, it is looking good. Now, in Q1, originally they had projected 5 launches of Electron. I think they're only going to get in 4 now. That's their current number. So we're even down 1 in Q1, which is a little disappointing. But I'm hoping they can maybe make that up throughout the rest of the year. I think I guess I closed it. But in the Q3 earnings presentation, maybe I can open that up real quick. The Q3 earnings presentation, they actually had a nice graphic which showed how many Electron launches they were planning in 2024. Yeah, it's right here. Let me drag that over here. You can see that. So this was, again, from the Q3 of 2023 earnings presentation. You can see this was the plan for 2024, and they were planning for 5 in Q1. I think as of today, or at least as of the earnings call this prior week, they were only planning on 4 Electron launches in Q1. So that's a bit of a bummer, but they have some space here, right? If you look even in Q3, there's 3 launches in the quarter is certainly not at capacity. So I have to imagine that, if this is still a launch that folks want, that the customers want, it probably just got delayed a little bit. And I think they've been pretty public about this, saying that, in the past, I think this was I'm not a direct quote, but I think they said that they've never been the one, in, let's say, the past year or two to actually hold up a launch. It's always been on the customer side, right? It hasn't been on on Rocket Lab. And so that's something where maybe the customer's payload got delayed into, Q2 or Q3 for whatever the 5th launch was going to be in Q1. So that's something just to be aware of. But if we do look forward now, they still are planning for, I guess they didn't explicitly say how many for this year, but, going back to their prior guidance was, I want to say, 22 launches. That's a very, very full docket. And I think it, looking forward, and that's what we can really expect from Electron. And they talked a bit on the earnings call on reusability is another thing that I talked about before on my channel for Rocket Lab. And, they talk about being able to reuse, components of Electron. And, that should really help with the gross margins going forward. They're not quite to that point yet. And they even said, they have some incremental progress. They talked about being able to, they just recovered one in Q1, one of their very, very recent launches. And they said it looks the best that it ever has in terms of, they recovered it. Now looking at, what they were able to recover. But I don't think they're actually trying to do a full, reusability in 2024. They said their focus is more on Neutron for now. And so I don't know that we will see the, the full benefit of that gross margin expansion from Electron in 2024, but I think they are making incremental progress towards that, and it might be surprising to the upside, right, where we see them do this in early 2025 maybe, as they've been making incremental progress as not their primary focus, but still something that's happening in the background in 2024. So that's kind of the state of Electron right now. And one other thing I would call out is they said, they have these differences between the sort of standard Electron launches and these haste launches, which are the hypersonic launches. And, they said that in terms of their contracts, they have quite a bit of these haste launches, 7 out of the 25 deals that were signed in 2023. And those are at a higher launch price, right? I think the percentage of margin is about the same because there are also additional costs with them. But that is at least good to see that when they do those launches, you can know that is slightly more, gross profit coming through, even if the, higher selling price, same percentage gross margin. So I think that's even still higher gross profit from those. So that's awesome to see. And one other thing they mentioned on the call is, the U.S. site now, in addition to the New Zealand site, is also operational. So they've got both of those sites that they can launch from now. All right, now Neutron, which is the really, really big, exciting story for the company. They've met a number of milestones. They've got more planned in 2024. They repeated on both the, a recent investor conference and on the earnings call that they are still on track to get Neutron, right? So, sorry, if you're not familiar, I should take a step back because I know maybe not everybody is. Electron is their smaller rocket that they have. That's the one that's currently in operation. Neutron is much bigger. I think Neutron is able to do, I think they said 13 tons. Hopefully I got that right. 13 tons of, capacity to get payloads into low Earth orbit. And so this is much closer to, it's still not quite as large, but it's much closer to like the SpaceX Falcon 9 in terms of capability, right? Electron is much, much smaller. Maybe, I'm not even sure, maybe 10% of what a Falcon 9 can do. So, but Neutron is in the same class. Again, still slightly smaller, but in the same class, right? Within, I think, 30% or so. And this is, the Neutron is currently under development, and they have their incremental progress on their milestones here, and they have more milestones planned in the very near future. Most of which they focused on having this, this hot fire test for the engine, the Archimedes engine, that is, I think they said, planned to happen maybe in Q2, maybe at the end of Q1 or maybe early Q2, I believe is roughly what they said. And so that I think is really, really good to see, right? I'm looking for that, and that's, I think, is a critical thing. If that goes successfully, we can have more confidence that they're going to be closer to the end of this year, right? So the expected timeline is to get this ready to launch by the end of this year. They haven't come out and said that they are going to actually do a launch this year. They don't have any contract signed or anything lined up, and I think there's clearly still some uncertainty here. But I think the point of what they're saying is the uncertainty is getting smaller and smaller and smaller over time as they meet these milestones. They check certain boxes and they're able to do those on schedule. That now once we see the hot fire test and some of these other things happen, especially they talked about that. It also, excuse me, they also talked about sort of testing the structure of the tanks, I think. And I am not a rocket scientist. I do not know enough about this to really give any insight other than to say the company itself has been clear that they've been consistent in saying they're still on schedule, and that is as they've met even more milestones. So I think that's just really a good sign. Hopefully everything does go to schedule and they're able to get it by the end of this year. Even if it slips into next year, Q1, I think that's really not a big deal. For the company, they don't imminently need this, right? Because of this full backlog they have of Electron. If they can at least keep signing these, and then the space systems can continue to grow, Neutron is going to be a big springboard for the company. But I think there's a lot still already going on with the company where they have a lot of value. And so it's really just good to see, right? These are sort of, stacking on top of the company they already have, and this is going to be great. Now, they are going to burn a lot of cash this year trying to actually get Neutron ready to launch at the end of the year. They estimated, or they've called out this number of $100 million worth of spend for this year. And they've even said, hey, we anticipate overall for the company, again, Neutron isn't bringing in any revenue, but from Electron or from Space Systems, they expect to bring in, more revenue this year at, higher margins, because they were able to sort of get some operational leverage here. And they said all of that additional, what would be increased, operating income is going to be eaten straight up with all of what we're spending on Neutron. And in the end, we expect to spend down, about $100 million worth of cash to actually get Neutron to this point to be ready to launch. And so they said that their EBITDA for 2024 is likely to be about the same as it was for 2023, right? Which is negative. And, they said that is in spite of growing revenue and growing margins, because again, as I said, all that cash is going to be put right into R&D for Neutron, R&D and CapEx for Neutron. But again, it's just really good sign that they're this far, right? They're in the middle of Q1 and they're affirming that they are still, as of now, on schedule for the end of the year. So that you do have to put a little bit of faith in management and trust in the company, but I think they've delivered in the past, right? This is not some startup that does nothing, right? They already have an operational, small launch vehicle, and so I think it's encouraging that they are, still reaffirming this timeline, given that they do have some experience and some track record of success. Hi, Changing Stacker. Thanks for hopping on the stream. All right, so that is one other thing here that I have in my notes, and that he called out on, I think it was the earnings call, maybe it was an investor conference, I can't recall. But one of the things that he was asked, I can't recall if it was the CFO or the CEO, was asked about, hey, if you really expect this to be, ready to launch by the end of this year, are you shopping it around, right? Or have you talked to customers who are going to want to contract this and actually sign something to get a launch on the books? And the response, I'm going to paraphrase here, was basically, well, we're not confident on the timeline quite yet until we do this hot fire test. And so we don't want to sign anything yet, because it gets complicated when you're not quite sure when you're really going to be ready to launch. And they didn't want to sign a contract that would put them in an awkward state there. But they did say, after this hot fire test, they are going to have enough confidence to really probably sign something. And they said, they expect to see something in the next few quarters. And I'm interpreting next few quarters as Q2 or Q3. So hopefully we will see a launch signed and lined up, and have a customer expecting to use Neutron, let's say before the end of Q3, right? Well before they are, at least a quarter ahead of when Neutron probably will be ready. And there's a couple of other comments in the call, of having, engineers, I think it was engineers, like sleeping under their desks to make this happen. And I think some of the urgency and some of why they keep saying the end of this year is because of this NSSL, lane 1 designation. I think that's, if I understand correctly, this is a government program for launch providers to sort of get onboarded in the program. And I think they need to do that. I think they're able to do this, once a year, sort of at the end of the year. And so I think Rocket Lab is trying hard to make it for this year, and if they don't make it, they can do it again next year. And so it's not the end of the world, but I think getting to be one of those, I don't know what you call it, an approved provider. I haven't spent that much time researching it, but it's the NSSL program through the government, I think through the space, through the Space Development Agency. And so that is, I think that's their target. And I have to imagine that the teams are really pushing hard to try to make that deadline. Are probably incentivized to do so because of that kind of threshold effect, where if they don't get it this year, it'll roll over to, it'll be a whole year before they can really get into that program. So that would be, great if it happens. If not, I don't think that's the end of the world. I think there are both government and commercial customers that want to use this, and so it's not like that's the only use for this rocket, right? There will be commercial customers that might also want to use this to deploy things. And so I think it's just something to keep in mind, right? And it is something where it's a sort of a very, very nice positive if they are able to get Neutron ready to launch by the end of this year. All right, now let's go on to, space systems. And there's a couple things that I want to touch on here. First, as part of this earning release, right, the same day they actually announced and they said, hey, we're going to give specific names to some of our, our family of spacecraft that we build, because, previously they didn't really, they didn't really give a lot of context here. And I'm sure maybe it was buried somewhere in their materials, but, me as an investor who's not an expert in this stuff, it wasn't always clear to me what exactly is it that Space Systems is building for some of these, right? I know that they have some components that they do supply to others, but they talk about building these full spacecraft that are being deployed, that they're even maybe supplying to someone else. And it wasn't really clear. Now they've actually come out and said, we've done enough of these things that are custom. We're going to kind of make these somewhat standardized, more products. And I'm sure these can all be customized to some degree, but they've at least sort of said we have a couple different use cases that people are using these for, and so they've laid these out, and they had a nice press release that talked about them. Actually, I don't think I have it open at the moment. But some of these are for like deep space. Yeah, so it's right here. It's the most recent announcement from the company. They talk about the maybe we could cross-reference this. The Photon it's just their, low Earth orbit communications, so that's this one right here, right? And then they talk about, let me find it right here. Lightning, this one is a sort of long lifespan. They talk about a 12 plus year orbital lifespan. And again, I don't actually know what all, there's a lot of differences here between these things. It's just interesting to see because, when I look at these things, to me, it's not obvious what the different use cases are, but they have different use cases for these things. There's different maybe quality of materials, different, levels of redundancy. I think that's one of the things they talk about this, 12 plus year orbital lifespan. They talk about, redundancy in all the critical subsystems. And, that's really what you need with this. If this thing is going to live for a long, long time, you need to be able to have some components fail and have the, this spacecraft continue to operate as if nothing happened, and so I think that's pretty interesting that they are actually specializing some of these particular spacecrafts here. But I think that just shows sort of a sign of maturity, right? You wouldn't see a company just starting off with this. They've sort of developed these over time with all of the work that they've done and what customers have wanted. And so I think this is really interesting to see. It'll be interesting to see how this plays out over time, if maybe they will start actually reporting on these and selling these in particular to customers and offering these as products that folks are can name and see, rather than talking about, well, I need something that can do that. I need something that can work in space for 12 years and can operate with this or that. I don't know. I don't know enough, again, really in the details of these things, but I think that's interesting that it shows a sign of maturity with the company, in my opinion, here. And then, of course, if you follow the company at all, this was a huge announcement. Where's the slide at? The SDA award, right? They got this SDA Beta contract, and this was, just under $489 million, just under $500 million here, over a multi-year period, with $26 million of additional options and incentives, and so total it's $550 million of a contract that they were awarded by the SDA, and they are going to build 18 satellites here. And again, they call it out. It's design, build, test, and operate. And so this spans the whole lifetime. Now, the one thing that this does not include, to my understanding, is launching them. And so that, I think, is going to be a separate contract that is not yet gone through its full process, as far as I understand. I don't think that's been awarded to anybody. But I think this is obviously huge for the company. This was what caused, I think, a lot of that big spike up in a couple months ago, right? You look at the chart and you see this big spike here, I think was roughly from this particular contract, in I guess it was late December. I wasn't really sure on exactly the timeline. I can't always recall these things, but so the stock started languishing here for a while, and then there's this big spike up for the mid fours or the mid fives, almost touching $6 here, and that was again it's a huge contract, right? $500 million is a huge contract for a $2.2 billion company. I mean, it really just is. The magnitude is enormous, and this contract it really shows two things. In addition to, yes, they're getting a bunch of money, and yes, they're going to do this particular work. It shows two things, right? Number one, it shows that because they emphasize this on the call, they are the prime contractor. They're directly getting this huge contract with the government. They're not a subcontractor anymore. They're going to have to subcontract out certain parts of this, but that they're now prime. They have this established relationship with the SDA, and that we could likely expect to see more of these sorts of things in the future. And that was really good, both on the company side and on sort of the SDA side. It gave a little more credibility that they to allocate this amount of money to this company really is a pretty big vote of confidence, right? Because I know there's a lot of players in this space that are smaller, similar size or smaller than Rocket Lab, and you do wonder to what degree do they actually have any success? Do they actually have a long-term plan? But the other thing that I was going to say is this really talks about the full spectrum of what Rocket Lab is able to do, right? They're designing and building and eventually operating these satellites. And again, I'm not 100% sure what it is that they are doing for operating this thing. I don't know if that's some sort of a, maybe a recurring revenue type thing that they might have, even after all of this. It's not obvious to me. I don't know how long these satellites are going to be are going to be deployed for, but I think that's really again, it shows the full breadth of what Rocket Lab is trying to do. And again, once they can also do that launch piece, which I think these would probably require the Neutron. I don't think that they can do these particular satellites with Electron, but once they get Neutron up and running, also being able to do that, that does show that they can do pretty much the full span. And again, I think they're going to have to subcontract out part of this, but they actually design and build quite a bit of of the full breadth of what they have to do for this. So that is really exciting to see. They did have a conversation on I think both the recent conference and the earnings call where they were talking about the long-term vision for the company. And maybe I could pull this up if I got the earnings transcript here. Is on sort of like space services. That was probably way too far down here for me to see. It's in one of the Q&As, one of the later Q&As here, where they really asked them about that, and they said, what do you mean by this? Let me see if I can find this real quick, because I think, yeah. So here it is, right here, the last question, right? So he says, talking about getting into the services business, and this analyst asked, hey, can you give us a little more, what does that mean, right? But, and the answer here was not great, but his point was, it's nice to be able to launch a rocket. It's nice to be able to, design satellites. It's nice to be able to, manufacture the solar panels or the what are they? The reaction wheels. Sorry, I always get them mixed up in my head. But each of sort of like point this service or that service or this part or that part. That's not really the biggest market, right? All those sorts of tiny little components and services are nice, but the bigger part of this is, somebody in the end, they're all doing this to get something up into space and operating and have that thing there, providing some service to you back on Earth, right? And the obvious, most well-known one here is SpaceX's Starlink, where the services, you get internet service, right? You're not contracting somebody to launch a satellite for you. You're contracting for internet service, and this was their point where they said, launches, just taking things up to space, maybe pulling them back down, that's $10 to $15 billion TAM. Space systems, all those components and building the actual stuff that goes into space, maybe $20 to $30 billion TAM. But the actual services, once you get things up there, what that can provide, the TAM for that, he says, is $320 billion. And his point is, he wasn't really willing to comment on precisely what services they're eyeing right now, because it's so far in the future, right? This is, probably 5+ years in the future. But the point was, the company is being strategic in building out this breadth of what they can do, right? They're being strategic and saying, cool, we can do launch, we can design the spacecraft, we manufacture a lot of the components that go into the spacecraft, so we can do these and customize. And so when the time comes for us to actually want to get into the game of providing the services that having things in space can provide, we have already have all the capabilities. We don't have to, contract out a whole bunch of things with a bunch of other companies and be dependent on what they can do for us. We will be in control of our own destiny. So I think that is really, where the company is going long term. And, again, that's not even going to be on any of my models today, because who knows what that's going to be. But I just wanted to call it out here because that's really, huge potential. And, Rocket Lab is not specializing in just launch, right? They have launch and they have all of these, they just call them space systems, but it's all the stuff that actually goes into that and what needs to go up there. And they've even got, they even do, I alluded to it, operations, right? And I think somewhere in here, either here or in the 10K, they talk about having, command and control software where they can actually operate and manage some of those things when they are in space. And so I think that is just a huge, a huge, it'll be awesome once they have all these things in place, right? They're being very strategic about that. And to some degree that gets me into, and I'm probably jumping ahead a bit, but, they did this recent, convertible raise. So let me bring that up and talk about that. I'll zoom in here a little bit so you can see. So they recently raised $355 million of convertible senior notes. Now, they did these convertibles, and those are at a 4.25% interest rate, which is obviously a very low interest rate in today's environment. These are due 2029. Now, they are convertible at a price of $5.13. However, at the same exact time that they did this convertible raise, they also did a capped call transaction. So what this is, to the best of my understanding, I've been invested at least one other company who did this, and so I didn't spend a whole lot of time on it for the other company, but I've spent a little time researching this. And as far as I understand, a capped call transaction is similar to just a normal call option, except the upside is capped, right? So normally you buy a call option, a company is for 100 shares, buy a call option at let's say on Rocket Lab at a $5 strike price, and so for a year out, right? So maybe it's a March of 2025 call option at a strike price of $5, and so a year from now, or anytime between now and a year from now, right? It expires in a year. I can exercise that call option. If I've purchased it, it's mine, and I can exercise that, meaning I can buy 100 shares of Rocket Lab at a price of $5 per share. And that's true whether Rocket Lab is at $5.01. I can exercise that, get my shares, and I can effectively profit 1 cent at that time. Or if Rocket Lab shares are worth $100, I can exercise that, still pay $5, and now effectively my profit is 100 minus 5, so I made $95 per share from that call option. Now a capped call is sort of the same sort of thing, except there's a maximum price that you can get, right? So somebody giving you a cap call would say, if my cap call goes from $5 to $8, then it would be, okay, I'm capping your upside at $8. So if Rocket Lab shares are at $5.50 and I have a cap call from $5 to $8, then I can exercise that and buy 100 shares at $5. And really it's something that would be cash settled probably, because you're not necessarily settling it in shares. But I'd get effectively 50 cents. 550 minus $5 is my 50 cents per share. Now, if again it's capped at $8, if Rocket Lab shares go to $100, I'm only getting up to $8 for the value of the shares, and from the sort of floor of $5. So I'm only getting that $3 difference from 8 minus 5. So even if Rocket Lab shares go way high, my upside is capped. Now I captured some of it from the move from $5 to $8, but nothing past the $8. And so that is simplified version of the transaction they did here. And I don't think we've gotten the full filing on this. They probably will come with their Q1 report in 2 months or so. But what they did here effectively was they did that a capped call transaction. So they took some of the money they made from they received from this convertible debt offering, and then they used some of that to purchase this capped call transaction at the same time for I think the same duration as the all the way out to 2029. Again, which same duration, meaning it matches the convertibles. And the net effect of this is that they got less money in their pocket right now, right? So even though they raised a principal amount on their convertible debt of $355 million, they only received after, they received that, but then they paid for this capped call transaction. So effectively they only got, sorry, that's not it. This is a $300.3 million. That's the net proceeds, right? Because they spent $43.2 million on that capped call transaction. And then there was obviously some fees associated with the offering and all that stuff. And so but the impact of doing this is over time, right? If and when they go to convert these into actual shares, so that they don't have to actually pay back the $355 million, they just convert into shares. Because of this cap call transaction, even though the convertible debt has a strike price of $5.13 per share, right? That's listed right here. Because of this cap call transaction, there's some additional upside that the stock can even go higher, where there will be no dilution, right? Because of this cap call transaction, they're going to be able to just purchase back the shares at that price because of this other thing. And in the end, there will be a lot less dilution going on. And so they put together a nice graphic here, which shows it. And maybe this is, maybe you could open this up and zoom in on it. The net impact here is really, because of that transaction, there will be no dilution all the way up to and including, the $8.04 per share of Rocket Lab, right? So Rocket Lab shares have to go up by 80% or so before there's going to actually be dilution from this. And that is because of this additional capped call transaction. So I think that's really, really interesting. And it's kind of a bullish move on Rocket Lab's part, because they kind of took some of the money that they just raised and plowed it straight back into, calls on their own stock. And I know that that's a simplification, but that's kind of what happened. Because they could have very easily just done this. Sorry, where's my right tab? I got lost. So they could have very easily just done the convertible debt raise, and 4.25% is pretty good interest rate, and said, yeah, there's going to be some dilution from this. Now, I think the reason why they didn't just do that, and why they did actually try to minimize the dilution unless Rocket Lab shares really go up over the future, is because Peter Beck, and I think to a lesser degree the CFO, Adam Spice, I think is his name. Don't quote me on that. they are fairly large shareholders themselves, especially Peter Beck, right? I think he's a founder. I think he still holds, tens of millions of shares. And so for him, all that dilution really hurts him quite a bit. So it's really good to see. I love to see this in management from companies when, management treats themselves as if they are also a shareholder, and they view dilution as taking away from their pocket as well. And so I think which is really good to see that they kind of have this confidence in the company that they actually want to do right by the shareholders by doing this. So in the end, I thought this was good. And if you look at the numbers here, right, it sort of ends up being, I think, roughly a 5% interest rate on that. If you view this as like a $300 million rather than a $355 million because they sort of spent that extra money, they're basically paying 5% on $300 million. And, again, if the stock doesn't go way, way up, which again, stock goes up, I'm not going to complain too much. But if the stock doesn't go, above $8 per share, then, there really won't be this dilution at all anyways. And so I think that's really good to see. Now, of course, if the stock in 2029 is trading below $5.13, then we're going to have, maybe a bit of an issue, because they're going to have to pay back that $355 million. And so, that, of course, is always a downside here. So I don't want to make it sound like this is only, strictly a positive, right? It's good for them to have gotten this money. And I'm, personally, I think it's likely that it's not going to be an issue, that the stock will actually be above $5.13 by, 2029, because that's, 5 years of progress, I think, will be, I personally think we're going to be pretty impressed by what the company does. But, I've been wrong in the past, could be wrong on this one. And so if that, doesn't happen, the stock is really below $5 at that point, then, then they're still going to have to pay back the $355 million, and all those, capped call transactions, all the capped calls that they're holding are probably going to, expire worthless, right? They're going to have just lost that $43 million that could have helped the company actually develop something is going to just effectively go down the drain. So that's why I say I really think this is kind of a vote of confidence in their own company and in their own ability to execute over the next, 5 years. So that's at least my, bullish interpretation as somebody who's probably pretty biased at this point. All right, let me go through some of their Q4 numbers. Let me zoom in just a tad bit. I'll take that away, zoom in. All right, so their operating income, I track this every quarter. Their revenue is actually down. I should mention that. I probably just go right up here. So this is the revenue per quarter, this row. I don't have a chart for this one, sorry. But you can see that these are all projected numbers, so ignore those. But if I look at their actual revenue, throughout most of 2023, it was 55, 62, 67.6, million dollars per quarter. And then in Q4, it was back down to $60 million. And largely that was because of, less launches, right? Because they had that issue in September with the anomaly. They keep calling it the anomaly, right? That was one of their launches that failed. They had an issue that happened and they had to bail out. And, again, if we go down to their segments here, I could probably drag this over so we can see. So go back to their, I have their launch services revenue and their space systems revenue split out separately. And so if we look at, Q4, launch services revenue was only $8.5 million for the quarter. And, space systems revenue, continued to grow is at $51.5 million, right? So almost substantially all of the revenue, right? 80%, let's say, came from space systems in the quarter. And so I think that, really carried the company. But again, because they had those failed launches and that sort of grounding after that, before they were cleared to fly again, and only got 2 launches in the quarter, if I am correct, then, that really killed it. That can't be right. 8.5 million. I feel like it's got to be slightly higher, but that's what I've written down. I don't know. Maybe I got that wrong, but anyways, I think their total revenue was still down because of that. But I'm not personally worried about that, because they are guiding for quite a bit more in Q1. And maybe I'm getting ahead of myself, but I think the revenue, I'm getting ahead of myself. I'll get to the Q1 guide in just a minute. Let me go through this number. But if I look at their operating income, right, I also track this, sort of see where are they going in terms of profitability. They were down for the quarter. Again, same reason, because launches was down. No two ways about it. I also track their actual cash operating income per quarter, and this is after I subtract out all their depreciation, amortization, and stock-based compensation, right? So this is a sort of a true metric. And I know this is it's a made-up metric. Nobody else does this. But for Rocket Lab, I kind of look at this because they do have a substantial amounts of depreciation, amortization. Because really, you look at Q4, rather than burning, what's that, almost $50 million in the quarter in terms of cash, it's really closer to $30 million per quarter. And that's relevant as I move down and really look at what does their run rate look like, right? They do have cash on hand. I can go to their go here, look at their balance sheet, right? This is as of December 31st, 2023. They had $162 million in cash, $82 million in current marketable securities, and even more marketable securities right down here are almost $80 million of non-current securities. And when I look at that, that's a substantial amount of cash, and they are burning money. But it's good for them to have that substantial amount of cash. Now, if I just look at that and I say, okay, cool. If I add up that cash and marketable securities, and then I divide that by what was their most recent quarter's cash burn, then I can come up with sort of a rough guesstimate of how many quarters they have left before they have to really start making some cash and becoming cash flow positive without having to either dilute like crazy or raise money from somewhere else. And if I look at it from this perspective here, and I'm looking at just their actual their reduction in cash quarter over quarter, right? Because that, I think, there's a lot of stuff you can put in the accounting, but in the end, when I see their cash and marketable securities going down and down and down over quarter over quarter, that does give me some idea of what they're actually burning, regardless of where it's being spent. Just how much are they burning right now? And so if I look at that as a naive number, they still have about 8 quarters worth of runway. 8.39 really is the number here in terms of at the end of the year, they probably could have operated the company sort of at a steady state for the same amount of R&D spend, same amount of CapEx spend, for about 8 more quarters before they would run out of money. So that's really good, I think, because they do have businesses that are growing. They do have businesses that are increasing profitability. So I think really because of their operations, they're only going to, it's only going to get better and better eventually, right? There's got to be some inflection point, really, is the point, is what I'm trying to say. Now, I can also look at this in terms of like, if I forget about sort of their CapEx and some of the other things that can change, that can cause cash balance to fluctuate, and I look at their cash operating loss, this gives you an even further run rate, right? And so this would be maybe if they slow down on some of the CapEx, which may not be an option for them if they want to still get Neutron going, but if they slow down their CapEx, slow down on some other stuff, this is where I think they could extend the run rate out even further. And, if I just look at, again, their cash operating loss as the denominator here, that gets me all the way up to like 13 quarters worth of runway. And so I think, that would be more than 3 years. And I think that is, again, pretty good for the company given their current state. So I think somewhere between, 2 years, maybe 3 years, somewhere in that vicinity is, what they can actually survive right now at sort of a steady state. And I think that is pretty good to put things in perspective as we're also looking at Neutron and all the cash they're dumping into that, because that spending is probably going to ramp up in tandem with, growing business results. And so I think this amount of cash burn is probably what we can continue to expect over the next year. And so I think this is actually a pretty credible way to look at things. So hopefully over the next 2 years, Neutron, figure they expend 1 year of this, right? And so if we do the same calculation a year from now, this likely will say they've got 1 year worth of run rate left. But the big difference should be now they've got Neutron ready to actually launch. And so if they got Neutron ready in that segment, they can maybe scale back a little bit on some of that CapEx. They can scale back a little bit on the R&D if they need to. And some of that R&D, they said this on the call, some of that R&D is going to turn into just, cost of sales because, what they used to be spending to develop the first Neutron, all that research is now just what it takes to produce, a Neutron rocket. And, so some of that will be split out and that will be weighed against the actual revenue that they're able to bring in. So they've projected that they're going to be able to do, I think, 3 Neutron launches next year. I think they ideally, right? And so these numbers, take them with a grain of salt, but I think they've said roughly they're hoping for 1 launch in 2024, 3 in 2025, 5 in 2026, right? And so this sort of fairly gradual ramp up, but again, when Neutron is so much larger, I think they've called out a price tag of roughly $50 million per launch. That is material to their revenue. And so tying this back to what I'm trying to get at right now is, even if a year from now the remaining run rate is, they've only got 1 year's worth of cash in hand that they could continue operating the company. If they get Neutron, if what they spent their entire 2024 doing is, burning down 1 year's worth of cash, but also, getting Neutron ready, now that revenue they're going to get from Neutron has kind of changed things pretty materially. And so 2025 should be much, much better from a cash burn perspective. So even though they might have less cash in the bank, their cash burn per quarter should go down pretty significantly. And so that run rate might stay, high again. And so eventually they're going to turn cash flow positive if everything goes well. And so that presumably should, as long as that happens in the 2025 timeframe, the company should be in a pretty good state. And that's kind of what I want to talk through in terms of liquidity. Hopefully you followed all that. If you have any questions, let me know in the chat or, in the comments. Happy to, sort of clarify anything if that didn't make sense. I also look at the profitability by segment, and no surprise here, the blue line is for the company overall. The yellow line is for space systems, and that continues to sort of trend up over time. In fact, it was quite a spike up in Q4 here from what it's been in the past. That was really great to see. And, the launches were way down. Again, that's just because they had less launches in the quarter, and so there was less sort of the fixed costs that they have for maintaining those launch complexes. Those fixed costs were a larger portion of their revenue, right? And to the degree to where they were actually negative on a gross profit margin basis for launches in the quarter. I think this is going to reverse pretty significantly in Q1 and probably every quarter of 2024. Maybe not Q3 if Q3 really does only have 3 launches. So maybe that one would be worse. Maybe that'd be closer to break even, let's say. Excuse me, but I think probably this is going to reverse and be much better for most of 2024 for the launch systems, launch services segment. I also track dilution in the company. This is definitely one thing that I keep an eye on for these companies that are not yet cash flow positive. And, they have continued to grow their share count, but it hasn't been horrible, right? If you look at this, they're adding about another, $3 to 4 million shares per quarter. So that's about a 1% dilution per quarter. Let's say 1 to 2%, somewhere in that vicinity. Which is, again, if they keep this up forever and ever and ever, you don't want to see the dilution getting out of hand. But 1% per quarter, like 4% per year for a company that overall is gonna has a potential to grow 20% or 30% per year is I think pretty well in line, right? That this is your stock-based compensation. This is a reflection of their stock-based compensation that they have done, and maybe that will trend down over time as they reach cash flow, a cash flow break even and positive state. But for now, it's not really concerning to me. They haven't done anything that seems exorbitant. I also try to look at their revenue per 1,000 shares, and this had been trending upwards, where even though they have been diluting, their revenue has been growing faster. It actually ticked downwards in Q4, but I think in Q1 this is very, very likely going to go sharply up again. And as the nice charts show, just their launches per quarter, and to compare it against history, right? I talked about 2024 being pretty packed and being a really good year, and this really shows it. Where Q1, even at 4 launches in Q1, not the full 5 they originally did, but even at 4, I think if I got these numbers correctly, that's gonna be their best quarter ever. Then they're gonna have even 2 more quarters this year. They're gonna be even better, and so it's gonna be really interesting to see. Now, if I look at their, revenue by segment, I've already kind of went through this, but you can really see where Space Systems is taking off as a big player here. And I actually put in their Q1 guidance here. That wasn't really on purpose, but I kind of put the numbers here. I could delete that if you want to see what it looks like without the Q1 numbers. Where you can see in Q4, again, launch services was down. Space Systems, was just the vast majority of their revenue. In Q1, you can see this is their projection. I'm getting, that's going to be my next topic to talk about is, they are projecting a tick upwards in both launch and space services revenue. Space services just continues to grow and grow and grow. Yeah, I mean, the year-over-year growth is going to be crazy. Q1, $60 million is a projection versus like 35 in Q1 of 2023. That's just eyeballing it like an 80% increase. I think that's huge. And launch services similarly is going to be this massive increase year over year. And so I think that'll be great to see. And they gave that guidance this week for Q1. So I think hopefully they have a pretty good picture of what things are going to look like, given that they're already almost 2 to 3 months down in the quarter itself. Now, the backlog, right? This is something that I've tracked over time, and you can see this massive spike up. You can see that this is just the result of that, SDA Beta contract award, right? That $500 million, like doubled their backlog, or almost. And so that's great, and they expect to, I think, recognize 41% of their, $1.05 billion backlog next year. And if you do just the quick math on that, right? Pull it up here, 41% of this, of that $1.046 billion would be, $428 million in revenue. Compare that real quick. Let me scroll all the way up here. Well, I guess maybe I could just go to 10K. What was the revenue in 2023? $245 million, right? So just right off the bat, just from what they've already got booked, that would be a 245, a 75% increase year over year when everything is said and done, in terms of revenue from, already contracted work. And so I think that is pretty significant, right? That's what we can look forward to in 2024 for the company. All right. I think that is, all the charts that I had. Here is my, let me talk about real quick their Q1 guidance. They do have a slide for this in their investor presentation, just so you're aware, and then I'll go through sort of my multi-year projection. So again, in Q1, they're expecting $92 to $98 million, roughly $60 million for space systems and $32 for launch services. Gross margin is going to be, 25%-ish. And so I think that's good to see that as they're growing, they continue to have this sort of, margin expansion. I want to say, what was it for? Sorry, I should have this number, but I think, it was lower than that in 2023. 51,409 divided by 244,592. And so their gross profit in 2023 overall was 21%. They're guiding for 25% in Q1, and I think that will actually increase throughout the course of this year. At least for launch services, it should increase as they have sort of, higher fixed cost absorption because they're doing more launches for the same infrastructure. And where am I at? Right here. And so this is the Q1 guidance that might even get better in, especially Q2 and Q4, where they have, again, looking at these quarters that are really packed with the, launches from Electron. For space services, I'm really not sure how to model out the margins. I know that different things, different components and spacecraft have different amounts of margin. I don't have enough visibility, and the company doesn't give that transparency to really see which things are higher, which things are lower margin, what's going to, be recognized as revenue in any particular quarter. But, overall, I think we can just look at kind of general, average margins for those segments. And I think that's something that, over time, as they are able to deliver on these larger contracts, these larger orders, I have to imagine that the margins are going to stay at least stable or maybe grow a little bit as they have sort of more control on what they're doing, and sort of gain leverage over, again, all their fixed costs in those areas as well. And so that's roughly what I wanted to go through for their Q1 guidance. Now I will talk about, and so again, if you have any questions or comments, feel free to leave them below in the chat. I really don't see anything so far. So we do have a couple folks on the stream. If you have any questions or comments, leave them. Otherwise, I'm going to keep going. So this is a model that I have for the company going out just a couple of years. And I've modeled this as, again, sort of the three. I've split out launch services between both Electron and Neutron, right? They are, I think, separable. And then I have space systems, obviously, modeled separately. And I looked at 2024 and I said, okay, let's just look at what their, how many Electron launches they expect to do. Let's do an average revenue per launch price here of $7.3 million, which I think is certainly in the ballpark. I think they did 7.1 in 2024. Don't quote me on that, or 2023. Actually, I should have the note right here in my own notes. It was $7.1 million. Yes, so 7.1 million. If we go here, revenue value per launch in 2023, $7.1 million. I think there's going to be at least a slight step up. Maybe I think, again, as they do more haste launches, those have a slightly higher price per launch. But if we go just look at this, I'm gonna use 7.3 as just an average, and I figure that steps up in 2025 and beyond to 7.5 million. Let's just say it stays flat. That's my model here for Electron, and then I model this as a number of launches, right? 22 and 2024. That was their original plan, and let's just figure that steps up ever so slightly from 22 to 30 over the course of the next 5 years. Maybe this will go much higher, and I think they've said they could certainly support 52 launches per year, and so maybe they will get up to 52 launches per year. If so, that is just additional upside to this model. I also looked at their gross margin percent, and I think two things are going to drive this, right? Number one, having more launches just again means that your overall profit margin as a percent goes up because your fixed costs stay the same. You're getting more launches done, so you're bringing more gross profit, more incremental margin from each one of those. So that is sort of something that pushes up your gross margin percent. You also have reusability for Electron, right? I think they're going to develop that in, as I said, maybe more in 2025 than in 2024. As in 2024, they're focused more on Neutron. But as they really work on that, develop their capabilities there, and being able to reuse things, that should again reduce their costs, which should increase their gross margin percent. And I think they said their target is eventually sort of a 50% gross margin here. I model this as it sort of increasing in 2024 and 2025, and then really just sort of gently stepping up close but not quite to 50% by the end of this sort of 5-year period that I'm modeling. And then right here, that kind of all gets calculated out to what would their gross profit be from Electron in each year. Then when I go to Neutron, look at Neutron here, how many launches do they have? And I sort of was, I'm not going to say pessimistic, but let's say realistic and say they'll get any launches in 2024. And then they start off with 3 in 2025 and 5 in 2026. Those are their target numbers right now. And I think they're targeting 1 launch in 2024. I just am not even counting it here. And so again, similar model for Neutron as I had for Electron. You have the revenue per launch. I just left that at $50 million per launch. And then, I put out their gross margin percent here. I figure that, let's say that starts at 20% and goes up again to 45%, as they sort of develop reusability for that one and have more launches, sort of absorbing those fixed costs. And I think just their margins over time, or their margins on Neutron should be slightly higher than Electron. I think because because this is just a higher price overall, and there's aren't as many providers for this. And so that I think is realistic. Maybe I'm wrong, but that's kind of how I modeled it out here. And again, that just gets you to a gross profit number that sort of scales from $0 in 2024, 30 million in 2025, all the way up to 270 million in 2028 in terms of gross profit. And I think these are realistic numbers, right? I'm going up to 12 Neutron launches in 2028, which I think, looking forward, to 4 or 5 years from now, doesn't seem like an outrageous number if they're going to, have the capability by the end of 2024. And if this really is a growing, market, they're a pretty strong player in it. Space Systems, I just got this 270 million number from looking at their overall backlog, subtracting out what I modeled out for their Electron revenue in 2024. That got me to about $270 million. And then I really have no idea how this is going to scale. I don't. What I model this as is what I think is fairly conservative of just a 15% growth, year over year throughout the whole period. And I think this because of kind of 2 reasons, right? Number one, 15% I think is realistic just with the overall growing space market itself. So I think there's probably some segments of Space Systems that are going to just grow just organically, right? Just the same thing that they're doing, they're just going to have increased orders. I also think, as they are really pursuing these, similar contracts to what they did for the SDA, Beta contract, it only takes 1 or 2 more of those, $500 million contracts. Not that I'm saying there's a lot of those out there, but, it doesn't take that many of these large contracts to really add up to, 15% growth year over year as they've got this. And I mean, even still, they've got some of this contracted revenue that they're going to be still recognizing in 2025 and 2026, from that's currently contracted to them, right? That the SDA Beta contract is going all the way through to 2027, I think, maybe 2028 even. And, I think even some of the other ones that they had, already contracted, a year or 2 ago, they're recognizing revenue this year and maybe even also next year. And so I think that, that what they've already got in the books, plus just signing a couple more contracts, really could get them this growth, without too much. I don't want to say without too much effort, but it seems very realistic. So sometimes I look at this and I say, 15% CAGR over 5 years, like that's pretty hefty, right? Because they're almost doubling their Space Systems revenue from 2024 to 2028. And, so sometimes I think maybe that's a little too optimistic. But on the other hand, it doesn't take that many similar contracts what they've already had to sort of blow this out of the park. And maybe they would get 25% CAGR over this time period. It's not out of the question. So I because I can sort of make an argument both ways, I'm hoping this is a fairly credible number. Then I look at their gross margin percent, and I pulled this 28% from I think what they did in Q4, and I'm not sure. I think they've talked about their target margins for this being exceeding well above 30%, maybe even getting closer to 40% here. I want to be a little bit conservative because again, I don't know what things are going to look like on these contracts. It is a competitive bidding process, and so I have to think that maybe 30% is at least realistic. And again, there could be upside to this number as well. I can't imagine they're going to try to do too much of this and sort of go below that 30%, but we'll see. Neil Weston says, "Okay, got you. Cool. Yeah. If you have any questions, let me know down there in the questions, or sorry, in the comments. Anyways, got all that out there, and then multiply that out, you get sort of a gross profit number from the space system segment, and then we look at sort of the overall, what does the company look like? And so that's this bottom whole section here. So you get the revenue that is add up from all those segments, get the gross profit again, which is add up from all those segments. So with this model, you get gross profit in 2024 of about $132 million, scaling all the way up to $520 million in 2028. Their R&D budget. Now, I set this R&D budget high enough so that, well, let me talk about R&D after I talk about SG&A. So SG&A, I just put $120 million, I think, in 20. Let me scroll down and find their actual statements of operation down here, and I think they were 110 in the prior year. I can't even find it. Let's see, statement of cash flows. This is always, there we go. That always finds me to where I need to be. So in the prior year, in 2023, they were at $110 million. I said, hey, let's increase that a bit to 120. And then let's give that a CAGR of 8% year over year, right? I think it's not obvious to me that they need to really grow SG&A too much. And so I did an 8% CAGR, which gets you from $120 million in 2024 all the way up to $163 in 2028. Then I set the R&D number for 2024 based on what I would need to get to the same sort of net income or operating loss, really, is the number I was going to match what they did in 2023, which was $178 million of an operating loss. And so I set that number here. This is how I'm trying to model out when they say, hey, we expect to have the same EBITDA in 2024 as 2023, because even though our systems, our space systems and our launch segments are growing in revenue and expanding in profit margin, all that cash is going into Neutron, and we're still going to have a loss, right? And they said, we expect to have roughly a similar loss in 2024 as 2023. And so this is what I modeled out. I said, hey, well, that to me translates into our R&D spend is going to increase quite a bit. And that's how I picked this number out of the air. So put that at $190 million. To get to overall in 2024, a similar, net loss, of $184 million. It's actually their net income of, negative $184 million. Then I looked at that and I said, for R&D, I figured that's going to decrease in 2025 and beyond. And maybe I'm wrong on this. Maybe it won't actually decrease. But I think if I understand correctly, some of what they are classifying as R&D for Neutron in 2024 can be shifted into, their just actual cost of sales that would count against Neutron, right? So this decrease of $50 million here would to some degree be absorbed into the, $100 million of cost of sales that would go into this, 3 Neutron launches in 2025 and similarly beyond, right? And so I looked at this and I held it steady also because I think they've said, that they expect R&D spend to go down after Neutron. It's not obvious what's going to be next on the plate, right? And so maybe the R&D spend will go up, maybe it won't go down, but I have to imagine if that's the case, it would be for some brand new service, brand new product. And so, I didn't model any brand new services or products here, really. And so I think if the R&D spend does go up, of course, this model will be wrong. But I also think there'd be additional upside in terms of the revenue that would go in future years. So for now, I'm sort of ignoring that as a possibility because we really just they haven't come out and said any of that. And so we don't have any indication that they are going to, move somewhere else. And again, there's an asterisk, that there's a sort of a something I'll talk about in a minute to tie it all together. But at least that's how I'm modeling this out here. And so looking at that, you get to your net income number. I sort of put the interest expense. I just multiply it out what they expect for Q1 of 2024 and just multiply it out across this. I don't think they're going to take on more debt necessarily. But if I look at this, I figure, cool, negative $184 million in net income in 2024. But that loss decreases significantly in 2025, almost break even in 2026. And then 2027 and 2028, they ought to get to be, by this model, they'd have a positive net income. And in 2028, in fact, they'd be very, very profitable, right? So they would have a swing from about negative $200 million in net income to positive $200 million in net income over that 5-year period. I also tried to model out their shares outstanding. I gave them a 6% CAGR over this time period, and so this goes from as of right now, I think it's roughly 490 million shares outstanding. By the end of 2028, this will get them to 654 million shares outstanding. I think that's fairly reasonable, right? That's roughly the target that they've done in the past. As I said, they were doing 1 to 2% dilution per quarter. Hopefully this is, in line with that. And putting all that together, I look at a value for the company in, end of year 2028. That's somewhere in this vicinity here, right? So it depends on how you want to value the company. If by that point you say, well, let's value them on their 2028, earnings, which I think would probably be, it's fair if you do the multiple correctly, right? Because by that point, they will be a fairly mature company. They will have actual earnings. $200 million is nothing to sneeze at. In terms of net income, margin, that's eyeballing it like maybe 15 to 20%. Let me take a look at this. F25 over F20. So that's a 16.2%. If I format that as a percent here. 16.2% net income margin, right? So they're getting to the point where they're a fairly mature company, right? That's not out of the realm for a mature company to have something 10 to 20% net income margin. And, but they are growing, right? I think there's still the potential. Space is such a small, or such a nascent field, right? And there aren't that many players. Who knows what's really going to happen? But Rocket Lab seems to be really developing their capabilities and coming as a very, very strong competitor, right? They're not SpaceX. They're clearly not the leader, but I think they have quite a bit of capability. If they continue to expand on that, by the end of 2028, it's possible they could be the number 2 or number 3 player in the entire space industry. And so look at that and look at them, growing revenue, 20% year over year, 15, 20%, somewhere in that vicinity. I think it comes down to what price to earnings would you value the company at by that point. And I made a little, maybe I can zoom in even more just on this, because this is, it's important to know what the punchline is here, right? And so I think if you valued that, if they actually achieve this $210 million in net income in 2028, you value it at a 25 PE, that's a $5.3 billion company at a share count of 654 million outstanding. This was, forget about that number. That was my prior model. I'll just delete that entirely to avoid confusion. It is actually pulling my share count from this, F27 right there. I can see it in the formula. At a 25 PE, which I think would be for a company that is, growing, and it is a, growing industry, probably as low as I could expect. Could be wrong. Again, not financial advice, but the way I would model this and the kind of what I am viewing as the range of outcomes for my own personal, investment decisions, not for yours, but for mine. I would view kind of a lower bound here as being a 25 PE, which gets you to a share price about $8. And it's possible if this really is, if they really are a strong competitor, they seem like they have, kind of a moat here, and a moat in terms of their vertical integration, right? Like I think SpaceX has that. I'm not sure that a lot of other companies do. And, if you look here, and if they're growing 20% year over year, you could expect to see something higher than 25. I think 30, 40, 50 are all possibilities, right? And so that gets you to your share price in 2028. That's, 9, 13, 16, right? I don't think that's outrageous to think that they could achieve, sort of a $16 share price in, by year end of 2028, right? So you look at that, that's like a 4x from here. That's a pretty significant CAGR, even at $8 at the end of 2028. That's roughly a 12% CAGR if I did my math correctly, from today's price of about $4.50 per share. And so that's what I'm viewing as, again, the range of outcomes. That's how I'm modeling it all out. And I think these are pretty credible assumptions. I think there are, again, ways that this could be conservative and that they actually could do better than this. And just in closing, though, the one thing I'd also go through is to say, I touched on it before, and it was directly from the earnings call, so it's nothing original to me. But they talked about long term, once they've built out this breadth of capabilities and they're able to be vertically integrated, to get to the point where they're just launching and operating their own constellation, and that they can actually provide services from that constellation. And again, we don't know what that's going to be, but that would be a major wild card here, right? And that would be, if you look at this here, if that were to come to pass, R&D spend would almost certainly go up because they'd have some more work to develop whatever to support whatever the services they want to do. We'd also see a lot more CapEx, right? I think for them to actually, right, today that they are just a provider of these services, a provider of components. They don't own those things themselves, right? They don't own I don't think they own any of the spacecraft that are up, in space. I think they are just, selling them the actual spacecraft, selling launch services. And so if they get into that amount of that kind of business, right, this model gets thrown out the window. But at the same time, both all the expenses that I'm modeling out are too low, right? Their R&D is going to go up, their CapEx is going to majorly go up, but their revenue ought to go up quite a bit even more, right? Presumably, if management is doing a good job, the revenue will go up way more than what some of the costs will, right? And that's kind of what they, again, going back to that call out on the earnings call. TAM for launches, 10 billion, maybe 15. TAM for space systems, 20, 30 billion. TAM for services, 320 billion. As they really get Neutron up, and I kind of think this is their long-term strategy because they've hinted at it here. Having Electron, having Neutron, having all the spacecraft and all the components that go into space systems here. This is now, they are bootstrapping the company in a way to where they actually are able to be, cash flow positive probably sometime in 2025, maybe 2026. But they've built up so many capabilities that now they can start to think about and evaluate their options for these, space services. And once they get to that point, they will be in such a good position because they already have, a profitable company, and they have all these capabilities and all the expertise there. And so, long term, again, it's not captured in this model at all, but long term, you might see management turn around and say, yeah, we are just getting to the point of cash flow break even. We're plowing all that cash straight back into CapEx, some additional R&D. So no, you're not going to see us make, positive net income. We are ramping up expenses because we think in 2029, 2030, 2031, right? A couple years even further down the road, that we can build out an even bigger, segment of the business and really grow even further. So that's where, for me, I think there's a lot of potential upside that is not at all captured by the current valuation. That is not at all, there's a trajectory of the company that gets them to base profitability and even has upside to the current share price. But then you're getting sort of a free call option on this long-term vision of the company where, I think, what I've modeled out here, sort of the, let me say, more straightforward growth for the company. Even this gets you to a double or triple, somewhere that maybe even quadruple on your shares if you were to buy today and hold for 5 years. And I think you're getting that sort of base upside if the company even does reasonable execution, and then you are getting a free call option, right? Because you're getting all the potential from the future, long-term future, where they could really grow. And again, this is a $2.2 billion company right now. Stock price $450 or so, doesn't matter. Market cap matters. $2.2 billion. If they really get into the space services, they really get into that market, and it is really, hundreds of billions of dollars of TAM. They have all these capabilities. They've already got some cash in the bank. They're able to raise because they can, they can borrow or they can issue equity at pretty good valuations because they have this operating company, in 2026, 2027 that is profitable. That's going to give them, they're going to be in such a good position to actually capture that. And, even if they never do that, I still think there's upside. So that's sort of my personal thesis on the company. And that's kind of everything I had to talk through today. Sorry, I say there's 10 people on the chat. Let me know if any of you have questions or comments. That was all the sort of prepared material that I had for today. I'll stick around for a minute or two and give you a chance there if you want to, if you have any questions or comments there. I will, in the meantime, just say I do these streams on, I try to do a stream every Sunday on mostly focused on stocks, sometimes also Bitcoin. I'm happy to take suggestions on what, folks are interested in. I have stocks that I hold, and for the next couple of weeks, probably I'll be talking, pretty soon I'll have one on Next Decade, ticker NEXT. That's another stock that I'm invested in. I think they will probably report pretty soon. In a couple of weeks when Nightscope reports, I'll probably also have a video on them. Otherwise, I don't know that I have the next couple weeks really lined up. I was thinking of looking into some, Bitcoin miners, just because, the Bitcoin space is very, very hot right now. And I think there's a lot of, nuance to the miners that I think, take some research and take some time to really dig into. And so I personally am interested in it. So, lots of what I share on my channel is really just stuff that I've spent my own time looking into, that for my own investing, my own modeling purposes. And so I just kind of want to share it with you guys. But if there's particular things that you're interested in, I'm always happy to hear suggestions. I did have one from a viewer recommended Richland Robotics, I think, and that's on my list. So I do intend to get around to that as well. But that's kind of it. All right, well, I'm not going to take any more of your time. I don't see any questions or comments on the chat, so I don't want to waste your time. Again, I will just mention I am on Twitter or X, at Dustin's Dollars. I do try to post on Sundays at least a little bit ahead of time of when I'm going to be live. That's about all I have to say for today. Thank you very much, 10 or 9 people for watching today. I really appreciate it. And hopefully you found this informational, educational. If you have any questions, feel free to, I didn't see it in the chat now, but if you have any questions, feel free to add them, in the comments, in the video. I try to respond to, everybody there if they ask me a question. So that's it. I see one. Total Eclipse Coffee. Thanks for your work. I missed the beginning, but I'll go back and watch it. I have a large position. Appreciate it. Yeah, absolutely. Glad you, glad you're here. Hope you enjoy it. Again, as you go back and watch it, if you have any questions, feel free to, ask me in the comments here, or, reach out to me on, Twitter if you have that. I'm happy to chat on there. Whatever. All right. Thanks, everybody. Have a good one. Take care.